Yeah, good evening, students. And today we are going to complete the second part of Ind AS 115, revenue from contract with the customer. Students, we started Ind AS 115 on 18th May 2025. So 1 month and 3 days back. And the second part, which is the second class on Ind AS 115, was scheduled on 19th May, but due to my health, it was, not conducted, and hence today I am completing Ind AS 115, right? Talking about Ind AS 115, so this standard talks about revenue from contract with the customers, right? So quickly I'll summarize this Ind AS 115 and then I'll cover some important questions, right, which is given by the Board of Studies of ICAI and which is a compilation from Board of Studies study material, RTPs, and the past examination questions, right? So friends, if I summarize Ind AS 115, revenue from contract with the customer, this standard talks about 5-step model. Doesn't matter what kind of industry or sector is there, doesn't matter what kind of companies are there, right? If a company has to recognize the revenue, that company has to apply Ind AS 115 and it has to go through a journey of Ind AS 115 5-step model. Okay. So every contract of revenue has to go through a 5-step model which is covered under Ind AS 115, and accordingly the company has to recognize a revenue. What is the 5-step model? First of all, this standard talks about, as the title suggests, revenue from contract with the customers. Means this standard talks about the bread and butter of the organization. Means this standard talks about the main revenue producing, the main activity, the revenue which is generating from the main activity, right? And it talks about the revenue which is generated by selling a goods or services, which is the ordinary activity of the organization, which is ordinary activity of the company, okay? And it has to be in exchange for a consideration, okay? So this standard defines who is a customer, what is a revenue, and this standard takes care of those incomes, right? Those consideration which is arising out of selling the goods and services, which is the ordinary activity of the entity, right? Now, what are the 5-step model? And in that class, of course, the recorded lecture is already there. So in that class, I have, I am always giving a helicopter view of Ind AS 115 with the help of an example. So the first is identification of a contract. The first step is to identify whether it is a contract with the customer, right? So identification of a contract with the customer does not mean, for example, you went to a shop and you buy a Maggie, okay? So it doesn't mean that you have to enter into a contract with the shopkeeper that, you have to, on 100 rupees stamp paper, you have to enter into an agreement and then you will buy 11 rupee Maggie, right? So it does not mean that, okay? So identification of a contract means that transaction is backed by the contract. And what is a contract? Even raising an invoice is a contract, okay? So contract could be oral or written. For example, when you went to shop and you told, I need Atta Maggie, right? A small packet of Atta Maggie. So he has, he told his servant that please get one Maggie packet. And he told that it is 11 rupee costing, right? So this is an oral contract between the customer and the shopkeeper, okay? It could be express or implied. It could be express as well as implied, okay? So when the shopkeeper is giving you Maggie and you are paying money consideration to the shopkeeper, this is an oral contract, and hence shopkeeper has to recognize a revenue of rupees 11 and accordingly cost to sales also, right? So the contract could be written, could be oral, could be express, could be implied. This Ind AS 115 step number 1 also says that, for example, if you are selling a goods, right, to a customer, so the certainty of collection will also be there. The certainty of collection will also be there, right? I can see 3 students have joined: Prashant, Akash, Kumar, Samyanathan, and Shahid. 4 students, right? So good evening, everyone, and good to see you all.
Good evening, sir.
Yeah. Good evening. Saminathan, you have raised hand. Do you have any query or you want to say something?
No, sir. I said good evening. Thank you.
Acha, you said good evening. Okay, thank you. Yeah. So I'm just recapping. I am setting a context, revising Ind AS 115, right? And then I'll come to complex questions. So identification of contract also captures that when you are entering into a contract, I mean to say when you have to recognize a revenue, you have to look at certainty of collection. For example, I'm a chartered accountant. Okay. My business is to render services. I'm into GST return. I am filing GST return for my customer, for my clients. So one of my client is already bankrupt. So Shahid, can you please stop using your Anot pen? Yeah. Yes. So one of my client is bankrupt, right? And I am filing his quarterly return. Okay. So tell me whether certainty of collection need to be assessed or need to be assessed for recognizing a revenue. I have already filed the return. I have completed my performance obligation and the price was agreed 1 lakh rupees per quarter for filing the GST return. Tell me, should I recognize revenue upfront or should I wait for certainty of collection? I should wait for certainty of collection. I should wait for certainty of collection. I mean to say, I need to evaluate certainty of collection. So my dear friends, in case if the question says that the customer is already bankrupt or he is not able to pay money to the other vendors. So in that case, there is an indicator which is given to you in the question that whatever certainty of collection is there, only to that extent revenue has to be recognized. For example, in question, it may be written that the company has sold goods of rupees 10 lakh to the customer. Already performance obligation has been satisfied. The price agreed was 10 lakh rupee. But as far as ability to pay of the customer is concerned, the customer is able to pay only 6 lakh rupee. So in this case, only 6 lakh rupee revenue has to be recognized immediately and 4 lakh revenue has to be postponed. And that revenue is going to be recognized only when the certainty of collection exists. Are you getting me? So this is one of the condition of identification of contract with the customer. This is one of the condition, right? This is one of the condition that it is probable that the entity will be able to collect the consideration it is entitled to. Okay. So that is the step number 1, identification of contract with the customer. And in step number 1, these few steps are given. Now coming to the step number 2, identify the performance obligation in the contract. What is meant by performance obligation in the contract? Means what sort of goods and services the entity is supplying. Okay, for example, standard says that you need to look at how many performance obligation. Like in my helicopter view example, I have taken an example that the entity is selling a Voltas air condition unit and stabilizer, installation service and maintenance service. So my question was how many performance obligation were there in the contract, right? So in that case, there were 4 performance obligation. Why? Because these 4 promises, these 4 goods and services are separately identifiable in the contract. Number 1. Number 2, the entity or the customer can use any of them with the available resources also, right? With the available resources also. Number 3, the goods and services should not be highly integrated, highly customized, right? So it should not be highly integrated, highly modified or highly customized, right? So if this is not the case, then you can say that, the separate performance obligation exists in the contract. For example, and let me take you to the Excel file and quickly on the Excel file, determine the performance obligation. So performance obligation is a distinct means separate goods or service or a series of separate goods or services, which is substantially same and have the same pattern of transfer, right? So performance obligation is a different goods or service or a series of different goods or services, right? So when goods and services are considered as a separate goods and services, number 1, At goods and services level, when customer can get the benefit of the goods and services at their own or with the help of readily available resources, right? So when you need to look at in your life as a student or in your practical life as a professional, when you need to recognize a revenue, you need to see how many performance obligation are there in the contract. And for checking the performance obligation, you need to look at two aspects. Number one, whether the goods and services are separately identifiable at its own. Number two, whether the goods and services are separately identifiable at a contract level. And I'm giving you example to understand. Number one, so whatever promises I'm giving you, for example, the company is selling a refrigerator and the company is also giving an installation service. The refrigerator comes with an installation service. So LG has sold a refrigerator on 29th March 2025 and LG has provided the installation on 10th April 2025. Now tell me, this installation service and refrigerator, sale of refrigerator, these are two performance obligation or there is a single performance obligation? Means when LG will recognize revenue, when LG will complete the installation, then only LG will recognize revenue, or LG will recognize a proportionate revenue when LG will deliver the goods and services, and LG will recognize the other part of the revenue when LG will complete the installation. Tell me, how many performance obligation are there? Two. So why two? Because when LG will sell the refrigerator, the customer can get the installation done either at its own. आपको पता है ना, वो रेफ्रिजरेटर आप लगाते हो, उसका स्विच लगाते हो एंड रेफ्रिजरेटर स्टार्ट हो जाता है, और यू कैन रीड द मैनुअल एंड गेट इट डन, और यू कैन कॉल योर लोकल मैकेनिक एंड ही विल इंस्टॉल. He will charge just 100 rupees or 200 rupees probably, right? So the customer Prashant or Shaminathan can get the benefit of the goods and services at their own मतलब खुद ही लगा लेंगे, or with the readily available resources, right? With the readily available resources. Okay, so it is a separate goods and services at its own. Have you understood this? Or at a contract level. What is meant by contract level? What is meant by contract level? Friend, yes. Second, at a contract level. So at a contract level, the goods and services are separately identifiable in the contract, right? कब separate माने जाएंगे? जैसे अभी आपने बताया दो performance obligation है. If there should not be a significant integration, there should not be a significant modification or customization, the activity should not be highly interdependent. Matlab, so in this case, tell me, is there any significant integration between AC or installation? Is there any significant modification? Is there any, this installation is highly dependent, or this refrigerator is highly interdependent? Yeah.
Yes, sir. It can be done by anybody else also.
Sorry, I was on mute. Yeah. So it is not significantly, there is no significant integration. It is not significantly modified and it is not highly interdependent, and hence these are two performance obligation, right? Even at contract level, it is separately identifiable. It's a separate performance obligation. At goods and services level, it is a separate performance obligation, right? So my first example, Reliance Digital dealer sells a refrigerator. It also provides delivery service on the request of customer. The customer may arrange delivery at their own as well. So sale of refrigerator is one performance obligation, delivery is a second performance obligation. Why? Because even when the Reliance will sell the refrigerator, customer can arrange delivery at its own, right? And this delivery and refrigerator is not highly interdependent, not significantly integrated, not significantly modified. Okay. Amazon is selling a refrigerator and Amazon is also delivering a refrigerator. Tell me, when Amazon will recognize a revenue? I mean to say, is it a single performance obligation or is it a two performance obligation for Amazon?
It's a single performance.
Why?
Upon delivery only they can recognize.
So basically, just think about, so when you order a refrigerator on Amazon, so how will you install? Until and unless you will get the refrigerator, right? So the refrigerator has not reached to the customer, and the customer cannot arrange the delivery at its own, because at times, just last week I have ordered few pen for my daughter, okay, stationery, and I was surprised to say that that stationery was coming from Mumbai, and I am living in Gurgaon, right? So one of the Asia's biggest market is in Delhi for stationery, and that 100 or 200 rupees pen, they were coming from Mumbai. Okay. So when you are ordering through Amazon or through, e-commerce or through online cart, you are not aware that from where it is coming, from which godown it is coming. So you cannot arrange delivery at your own, right? So that is why for all these e-commerce, when they deliver the goods to the customer, then only they will recognize the revenue. And for example, installation is also there. So they should not wait for installation. They can recognize the revenue when they deliver the goods, right? इंस्टॉलेशन का जो पोर्शन है वो बाद में रिकॉग्नाइज करते हैं, बट रेफ्रिजरेटर सेल का कर लेते हैं डिलीवरी पे, राइट? नाउ थर्ड एग्जांपल, फ्लिपकार्ट. फ्लिपकार्ट इज सेलिंग पार्ट्स ऑफ कंप्यूटर. You ordered a computer, but Flipkart has sold computer parts, laptop parts, and Flipkart has delivered the laptop parts. Have you ordered for laptop parts or have you ordered for laptop? You need laptop, but Flipkart has given you laptop parts. Now Flipkart will send the engineer for assembling of those laptop parts, those that screen, keyboard, motherboard, right, circuit. So the engineer will come and assemble all those parts and make it a laptop. So tell me whether these are the three performance obligations: sale of computer parts, delivery of parts, and assembling of parts. These are three performance obligation or single performance obligation?
It is integrated each and everything, all the things. It's a single performance obligation.
You are right. So basically, Saminath, you are absolutely right. So first of all, till the time it is not getting assembled, it is of no use to the customer. That is number one. Number two, normally, when you order a laptop or a computer, you have ordered a laptop and computer and you need the laptop and computer. You are not getting these parts assembled through a local mechanic, because because the company will also give you a warranty, and warranty will also only hold good when you will get it done, assembly, you will get it done from the company only, right? So that is there. Number two, so it is at a goods and services level. Number two, at a contract level, of course, these parts are highly integrated, modified, customized, highly interdependent, right, to make it a computer. And hence it is not a small activity that you call a mechanic, he will come and half an hour he'll charge 100, 200 rupees, 500 rupees, and he will get it assembled. Answer is no, right? So it is a single performance obligation. Flipkart will only recognize the revenue when the part will get assembled, if it is a part of the contract. Okay. Is that clear?
Yes, sir.
Yeah, very good. So now I'll discuss one of the examples. So basically, we understood, identify the contract with the customer. Number two, identify the performance obligation in the contract. How many performance obligation are there? In last class, you remember one of the example or one of the complex question I have covered for reward points, loyalty points, right? For example, when you are flying in aeroplane, when you are traveling through a flight, traveling through aircraft. So when you are buying a ticket, you are getting a reward point also, right? And with those reward points, you are getting a right to purchase the ticket at free of cost. So the company which is selling you ticket, the company is also giving you reward point. And with those reward points, the company is giving you a right to purchase the goods in future. So is it a single performance obligation or there are two performance obligations? Again, I am repeating my question. For example, I am an aviation company. I'm SpiceJet, for example. Okay. I have sold a ticket for rupees 10,000 from Delhi to Mumbai. Okay. So 10,000 rupees I have sold. So I'm giving my customer right to fly from Delhi to Mumbai at rupees 10,000. Okay. And I'm also giving 2,000 reward points worth rupees 2,000. Right. And with this 2,000 reward points, the customer can purchase the ticket in future. So my question is, should I recognize entire 10,000 rupees upfront because I have received 10,000 rupees? So if it is a single performance obligation, of course, 10,000 rupees will be recognized. But is it a single performance obligation or is it a two performance obligation?
It's a two, sir, two performance. In the future, definitely the customer will purchase a ticket. If purchased based on the estimation for the fast experience, based on that, the company entity can recognize.
Prashant, what is your view?
My view is two performance obligations.
Yes, two performance obligation. And Salesh, you are also right. So Salesh, it would be great if you can join online, right? While Salesh has joined offline and is asking question through the query portal. So yes, there are two performance obligation. Number one, the first performance obligation of the company SpiceJet is to giving a customer a ticket which gives him a right to fly from Delhi to Mumbai. The second promise is with those 2,000 reward points, SpiceJet will give a ticket free of cost, right? Okay. So free of cost, for example, the customer wants to travel from Delhi to Chandigarh and ticket cost is 1,900 rupees, for example. So the customer can buy free of cost. With those reward points, the customer can purchase a ticket for another route, another sector. So there are two performance obligation. And the only aspect is you need to estimate how many customer will avail these reward points or not. But there are two performance obligation in case of reward point. And this entire 10,000 rupees is not going to be recognized as a revenue. This 10,000 rupees has to be allocated between the standalone selling price of Delhi to Mumbai ticket and the estimated value of the reward points. Okay. Yes. So this question we have done in the last class when we started Ind AS 115. The third one is determine the transaction price. What is the transaction price? And my dear friends, transaction price could be a fixed consideration as well as a variable consideration, right? So a transaction price could be a fixed consideration as well as a variable consideration. What is meant by fixed consideration and what is meant by variable consideration? So transaction price is an amount which the entity expects in exchange of transfer of goods and services to the customer, excluding amount collected on behalf of third parties. Transaction price is an amount which the entity expect, जो entity उम्मीद करती है, expect, right? In exchange for transfer of goods and services to the customer, excluding, उसको छोड़ दो, किसको छोड़ दो? Excluding amount collected on behalf of third parties. Maruti Suzuki India Limited, or let's say Tata Motors. Tata Motors sold Nexon car for rupees 10 lakh. 8 lakh rupees is the cost of the car and 2 lakh rupees the GST, right? Which Tata Motors has collected from the customer. What is the revenue for Tata Motors? What is the transaction price for Tata Motors?
8 lakhs.
Why not 10 lakh, Prashant?
Because GST collection is not part of the revenue. It will be paid to the government.
Okay. Yes. You are right. So basically in this transaction, Tata Motors is acting as an intermediary, right? So Tata Motors is collecting GST from customer and depositing it to the government. Okay. So revenue is 8 lakh rupee only. Okay. So few examples we'll cover to understand transaction price. The contract price is rupees 10 lakh and the entity is expecting a collection of 6 lakh rupees only. So tell me, what is the transaction price?
6 lakhs only.
Why 6 lakh? Why not 10 lakh? Contract to 10 lakh ka hai, contract price.
Because remaining 4 lakhs is uncertainty. Only the entity is confirming only the collection will be only in 6 lakhs.
Yes, you are right. So the transaction price for the purpose of recognition of revenue will be only that price which the entity is expecting a collection. Okay. Of course, this 4 lakh will also become a transaction price, right? This 4 lakh will also be recognized as a revenue only when the certainty of collection exists. Okay. Example number 2, the contract price is 1,000 rupees and 18% GST has been collected on the same. Whether transaction price is 1,000 or 1180?
1,000 rupees.
1,000 rupees, right? Third example, the contract price is rupees 1 lakh. If the entity will deliver the product before contract delivery date. So what is the contract price? 1 lakh rupee. 1 lakh rupees fixed consideration. If the entity will deliver the product before contract delivery date, the entity is entitled for an incentive of rupees 50,000. Okay. The entity has a past history of delivering before contract delivery date and expect that it will receive incentive of rupees 50,000 also. Determine the transaction price.
1 lakh plus 50,000, sir. 1 lakh 50,000. Because
it has a past history.
based on the past experience, it is there is a certainty to receive the amount of 50,000 rupees.
Yes, you are right. So basically, you know, what is fixed consideration and what is variable consideration, Prashant? In this case, what is fixed and what is variable?
1 lakh is fixed and 50,000 is variable.
50,000 is variable consideration. So in this question, it is written that the entity has a past history. It means there is very less chances. So there is high probability that significant reversal will not come. Means if the entity will recognize this 50,000 variable consideration as a transaction price and recognize as a revenue, so of course the entity is highly probable that the reversal will not come, right? So transaction price is, it includes fixed consideration as well as variable consideration, right? So in transaction price, there are 3-4 component. Variable consideration, right? So how variable consideration will be estimated? So friends, variable consideration will be estimated using the two approach. Approach number 1, expected value approach. Approach number 2, most likely approach. What is meant by expected value approach? Probability weighted approach. Probability weighted approach. For example, in case of volume discount, आपको पता है, आपने देखा होगा बिग बाजार. Have you seen Big Bazaar, Reliance Retail, Sodis? So all these big marts, have you seen that? So these company like ITC, Nestle, Hindustan Unilever, these company gives the volume discount. Pepsi, Coca-Cola, they says that if you purchase 1 lakh unit from us, we will charge you 10 rupees. But if your units go beyond 1 lakh, for example, 1 lakh 1 to 1 lakh 50,000 unit, we will give you the entire population at let's say 9 rupees. So these are the volume discount, and probably the company may reach to that quantity level, company may not reach at that quantity level, right? So for estimating the variable consideration, there are two approaches. Number 1, expected value approach. Number 2, most likely approach. For example, for expected value approach, the company may use the probabilities which are given in the question. Like there are 15% chances that the company will not be able to achieve. 20% chances the company will be able to achieve 1,20,000 unit. There is 65% chances the company will be able to achieve 1,40,000 unit. So how will you compute expected value approach? 15% multiply by 0 plus 20% multiply by 20% multiply by let's say 120 plus 65% multiply by 130 or 140, right? We'll do a question on this. What is most likely approach? For example, there are 30% chances company will be able to achieve the quantity of let's say 1,10,000 unit, and the 70% chances that company will be able to achieve 1,40,000 unit. So what are more chances? Most likely means ज़्यादा chances क्या है? 140. So 140 is the estimated quantity for computing the variable consideration. We'll do a question on this. Okay. So significant financing component, if the goods have been sold for more than 1 year, if the goods have been sold on a credit for more than 1 year, then there is a rebuttable presumption that significant financing component exists. And in that case, you need to check what is the finance income, what is the interest income in addition to the revenue from sale of goods and services, right? We'll do one question on this also, right? So then there is a non-cash consideration when The entity is selling goods, and in return, the entity is not getting cash. The entity is getting what?
Kind
The entity is getting
some other asset.
some other goods or services, some other assets. Okay, some other assets.
Yes.
So consideration payable to a customer when the entity is paying some consideration to a customer. For example, the entity is paying. Okay. So the customer, so entity is selling goods to the customer. Of course, entity has to get the money from the customer. So let's say I have taught, let's say 10 classes to Saminathan. And I told Saminathan that, my fee will be 10,000 rupees. So of course, Saminathan will pay me 10,000 rupees, right? But I'm very happy with him. And I told him, okay, not to worry, when you complete 10th class, I'll return 1,000 rupees to you. So in this case, what is my, in this case, I am paying 1,000 rupees to Saminathan without getting any goods or services. Saminathan is not giving me anything. Okay. So what is my revenue in this case? In this case, the consideration which I'm paying to the Saminathan, it has to be adjusted from revenue. But let's say I am charging 10,000 rupees from Saminathan, and I told Saminathan that I have heard that you are a very good, you are very good in playing guitar. Can you please, give 2-3 classes of guitar to my daughter? So Saminathan told, yes, sir, I will, teach, I will take 2-3 classes for her. Okay. And I told that I'll pay you 1,000 rupees. Okay. So he is paying net 9,000 rupees. But tell me, my revenue is 9,000 or my revenue should be 10,000? So Saminathan is my customer also, right? He is my customer and he has to pay me 10,000 rupees, but he is only paying me 9,000 rupees. So what is my revenue, 10,000 or 9,000? In this case, the consideration which is payable to customer is in return of getting some goods and services, right? So whatever I'm paying, so 10,000 I'm receiving and 1,000 I'm paying. So net he is paying me 9,000 rupees. So this 1,000, I'm not giving him without anything. I'm giving him because I'm getting some goods and services from him, right? So this 1,000 rupee will be a cost to me as a company and 10,000 will be a revenue from operations to me, right? So these 4 aspects are there in determining the transaction price. Okay. So this is the third aspect. First, identify the contract with the customer. Second, determine the performance obligation. Third is determine the transaction price. And fourth one is allocate the transaction price to the performance obligation. Allocate the transaction price to the performance obligation. For example, the transaction price, the contract price is 1 lakh rupee only. Now you need to allocate the transaction price into the multiple performance obligation. So how will you allocate? So standard says that you need to allocate the transaction price into the performance obligation in the proportion, in the ratio of their standalone selling price. In the ratio of their standalone selling price. Okay. In the ratio of their standalone selling price. So that you need to allocate. Okay. And while allocating the transaction price, there are 3 methods of allocating the transaction. If standalone selling price is there, then there is no problem. आपको पता है 3 परफॉर्मेंस ऑब्लिगेशन या 4 परफॉर्मेंस ऑब्लिगेशन है. जैसे मान लो जब मैंने आपको अभी ये हेलीकॉप्टर व्यू दिया था इंडेस 115 का, ये एयर कंडीशन वाले एग्जांपल में, तो मैंने बताया 50,000 रुपए, 50,000 रुपी इज द ट्रांजेक्शन प्राइस एंड देयर आर 4 परफॉर्मेंस ऑब्लिगेशन and there is a standalone selling price available for every performance obligation. So we have allocated this 50,000 in the ratio of the standalone selling price of all the performance obligation. But what happened? If the standalone selling price is not there, then standard gives you 3 approaches. Number 1, AMMA approach, adjusted market assessment approach. Adjusted market assessment approach. Adjusted market assessment approach. What does it mean? For example, the entity is selling a package of goods and services, AC, stabilizer, installation, and maintenance, and determine these 4 performance obligations. The entity is not selling stabilizer separately. Okay. The competitors are selling stabilizer at rupees 5,000. So the entity estimate that the purchase cost of stabilizer may be more than 10% in comparison to its competitor. So सो जो एंटिटी है वो एयर कंडीशन, स्टेबलाइजर, इंस्टॉलेशन, मेंटेनेंस सर्विस, ये 4 चीजों का पैकेज बना के बेचती है. ओके, बट एंटिटी डज नॉट सेल स्टेबलाइजर सेपरेटली. So the company is not selling, but competitors are selling, right? And entity estimate that the purchase cost of the stabilizer may be more than 10% in comparison to its competitor. Okay. What is the standalone selling price of stabilizer to the entity? Tell me. क्या हो सकता है? So adjusted market assessment approach means whatever is the market rate, you have to adjust your expectation in that and you can compute the standalone selling price. For example, in market, the competitors are selling at 5,000 rupees. So what could be the standalone selling price? So the entity is estimating that the purchase cost, right? If the entity will purchase those stabilizers separately, might be it will become costlier to the entity. So this is the 10% which the entity is giving a weightage on 5,000. So for this entity, the standalone selling price could be 5,500. Okay. The second one is cost plus margin approach. What is meant by cost plus margin approach? Let's understand with the help of an example. AG Limited sold a software and also provide installation service to the customers. AG Limited sold a software and also provide installation service to the customer. The entity does not provide installation service separately and always used to sell software and installation together. Both of these are distinct goods and service, and hence two separate performance obligation exist. Though separate performance obligation, sale of software and installation. The entity has engaged a software engineer who helps entity in installation of software on the customer premises. The engineer charge rupees 5,000 on every installation performed. Normally, the entity earns 20% margin on the goods and services delivered to the customer. Determine the standalone selling price of installation service. So cost plus margin approach means when you don't sell, yes, when you don't sell a performance obligation separately, of course, you don't know what is the selling price. But if you are aware about the cost, like in this case, the cost is 5,000 rupees, and you can factor your margin, like in this, like 20% margin, the entity works on 20% margin. It means for installation, the standalone selling price for installation, the standalone selling price will be 6,000 rupees. Okay. So have you understood adjusted market assessment approach, cost plus margin approach, and the last one is residual approach. Bacha hua. What is residual approach? The entity is selling a package of 3 goods, A, B, and C for rupees 50,000. The entity used to sell B and C separately also, but always sold A with B and C in a package. The standalone selling price of B and C is 20,000 and 25,000 respectively. What is the standalone selling price of A in this transaction? क्या होगा residual approach use करके? Using the residual approach, the balancing figure will be A. B is 20, C is 25, total is 50,000. So this will be 5,000. 50 minus 20 minus 25,000, right? Okay. So these are the 3 approaches for, allocating the transaction price to the multiple performance obligation. And the last approach is, and the last step is recognition of revenue when the performance obligation is satisfied, right? Either at a point in time or over a period of time. So friends, now I am starting solving some complex question which is given by Board of Studies of ICAI. Please confirm if my Word file is visible to all of you. Please confirm if my Word file is visible to all of you.
Yes, sir. Visible,
Friends,
sir.
Yes. Friends, question number 2 I have already covered on 18th May. So now I am taking you to question number 3. And this question number 3 is on what? Is on allocation of transaction price. This question number 3 is on allocation of transaction price. You remember we told about this allocation of transaction price. What are the 3? So tell me how the transaction price will be allocated to the performance obligation.
So based on the standalone selling price, sir.
In the ratio, in the proportion of the standalone selling price of the performance obligation. But if the standalone selling price is not given, then then you have to use 3 approaches. What are the 3 approaches? Number 1, you need to identify the standalone selling price by using AMMA approach, adjusted market assessment approach. I'm not selling separately, but whether my competitor are selling separately. If the competitor are selling separately, that price will become your standalone selling price for you, right? Cost plus margin approach. While I'm not selling this separately, but what is the cost to me? And if I factor my margin into that cost, I'll get a standalone selling price. Residual approach. Okay, there are 5 performance obligation. There is a total transaction price. I know the price, standalone selling price of 4 performance obligation. I don't know the standalone selling price of 1 performance obligation. So total transaction price minus aggregate of the 4 performance obligation standalone selling price, जो बचा हुआ है residual approach से, that will become your standalone selling price of 5th performance obligation. Is that clear? Clear in mind or clear from mind?
Yes.
Friends, this revisionary classes are an opportunity to revise it on a live basis with a faculty, with a teacher, right? In 3 hours, and to solve the complex questions also, right? And I can give you, one of the, so in the last exam, so a student scored 78 in financial reporting. And I can tell you, he did self-study and he has attended the revisionary classes of Board of Studies of ICAI, only revisionary classes. And his feedback and he writes a mail to questions also. Okay. So let's discuss question number 3. An entity regularly sells product X, Y, and Z individually, thereby establishing the following standalone selling price. X, Y, and Z individually. Thus, SSP, standalone selling price is product X is 50,000, Y 25,000, Z 45,000. The total is 1,20,000. In addition, the entity regularly sells a package of product Y and Z also at 50,000 rupees. What is the standalone selling price for product Y and Z? What is the total of Y and Z? What is the total of
70,000?
70,000. 45 plus 25, 70,000. And at what price normally this entity sell this package of Y and Z? 50,000. It means
Discount.
when the entity sell the package of Y and Z, the entity gives a
Discount of 20,000.
discount of 20,000, right? Discount of 20,000. Okay. So case A, question number 1. Allocating a discount to 1 or more performance obligations. The entity enters into a contract with the customer to sell product X, Y, and Z in exchange for rupees 1 lakh. Okay. So these are the standalone selling price. Now, what is the contract price? What is the transaction price? 1 lakh rupee in this question. The entity will satisfy the performance obligation for each of the product at a different point in time, or might be product Y and Z at the same point in time. So X, Y and Z तीनों का different point in time में कंपनी क्या करती है? कंपनी परफॉर्मेंस ऑब्लिगेशन सेटिस्फाई करती है. सो जैसे जैसे कंपनी परफॉर्मेंस ऑब्लिगेशन सेटिस्फाई करेगी वैसे वैसे रेवेन्यू नीड्स टू बी रिकॉग्नाइज्ड, राइट? सो व्हेन रेवेन्यू नीड्स टू बी रिकॉग्नाइज्ड, revenue needs to be recognized when the entity will satisfy the performance obligation. It could be at a point in time or it could be over a period of time, right? So friends, this entity satisfy the performance obligation at a different point in time, okay? Or the package of product Y and Z at a same point in time. The product Y and Z package at a same point in time. So same point in time पे होगा तो क्या होगा? What will happen? So the revenue relating to Y and Z has to be recognized at the same time. Determine the allocation of transaction price to product Y and Z. Tell me what is the transaction price which is allocated to Y and Z?
Sir, in this case, the product X, there is no issue. The standard price is 50,000. The 50,000 goes to that. For that, Y and Z, they go to allocate based on the 25,000 and 45,000 on the ratio of.
Okay. So what is the standalone selling price for both these three, for both the three product, for all the three product? 50, 25, 45, right? 50,000, 25,000 and
45,000.
Okay.
Totally
The
1,20,000.
total is 1,20,000. What is the transaction price? What is the transaction price?
It's 1 lakh
1 lakh transaction
for
price
altogether.
For all together, right? So now we need to compute that how this 1 lakh is going to be allocated between these three, right?
1 lakh.
So one thing is very clear.
Yeah,
one thing is very clear.
Yeah.
So 50,000 has to be allocated to Y and Z. So first of all, this between this 1 lakh, because this company sells, Y and Z together at 50,000. So 50,000 should be the transaction price for Y and Z, and 50,000 for X. Is that clear?
Yes, sir.
Yeah. But now, what is the allocated price? What is the allocated price? What is the allocated price for all these three? So of course, for A, there is no issue. Yes.
Sir, the 50,000, yeah, 50,000, the ratio of 25 and 45.
Now this 50,000 has to be allocated in the ratio of, 50,000 into multiply by 25 divided by
70.
70. Can I write 70? You understood na 70 means this 70 is 25 plus 45, right?
Yes, sir.
This multiply by 45 divided by 70,000. Right? And what is the total? The total comes out, the total should be 1 lakh.
Yes, sir.
So this is your allocated price on the basis of standalone selling price. So what we did, so we have applied the discount to the lower package which is there, and the lower package was Y and Z put together, right? So this is how we have determined that allocated price. I hope this is clear to all of you. Yeah.
Yes, sir.
This is solved, right? This is solved.
Sir.
Okay. So you can write the English. So in answer, a lot of English is written, right? So you don't need to see this English. This English means ये जो लिखा है वो सब ऐसा लिखना नहीं है. You can write simple. In this question, the standalone selling price of Y and Z is 70,000. While it is getting sold at 50,000, the package is getting sold at 50,000. It means using the residual approach, 50,000 is the Y and Z price, 50,000 is the standalone selling price of 50,000 is the transaction price for X, right? Now, the difference of 20,000 discount has to be allocated between Y and Z in the ratio of 25:45. And this is how you will arrive at the allocated transaction price, and you will recognize those amounts as a revenue when the performance obligation X, Y, and Z will be satisfied. Correct? Now, case B. Residual approach is appropriate. Residual approach. I don't know what it is saying, but let me read the question. The entity enters into a contract with a customer to sell product XYZ as described in case A. The contract also includes a promise to transfer product alpha. In addition to these three products, one more product is there. What is the name of that product? Product alpha. Okay. Total consideration in the contract is 1,30,000. Now, what is the total consideration? What is the total transaction price? Transaction price is consideration 1,30,000. The total transaction price is 1,30,000. Now, what is the allocated price? Allocated price, the standalone selling price for Y and Z is 50,000. For X, it is 50,000. Right? So 1 lakh is the allocated 1 lakh is the standalone selling price is of X, Y, and Z. But the price is 1,30,000 transaction price. So using the residual approach, what should be the price of alpha?
30,000. 1 lakh minus 1 lakh 30 minus 1 lakh 30,000.
Yes. So the standalone selling price for the product alpha is highly variable because the entity sells product alpha to different customers for a broad range of amount 15,000 to 45,000. Determine the standalone selling price product XYZ and alpha using the residual approach. So you are absolutely right. So let me read for you this answer. Before estimating the standalone selling price for product alpha using the residual approach, the entity determines whether any discount should be allocated to the other performance obligation in the contract. So the entity has identified that product X standalone selling price is 50,000, which is directly observable. Product Y and Z is 50,000 after giving a discount. And using the residual approach, 30,000 is the product alpha, right? So the entity observed that resulting 30,000 should be allocated to product alpha is within the range of observable selling price, which is 15 to 45. Okay. इसमें दिया भी है question में. The question also says that it is within the range 15,000 to 45,000. So 30,000 is the price. Now, case number C. Residual value is not appropriate. Then what to do? The same fact as in case B apply to case C, except that the transaction price is 1,05,000 instead of 1,30,000. Now what to do? So in this case, so everything remains same. This 130 becomes 15. So what is your using the residual approach? What is your price for product alpha?
Alpha I can allot only 5,000 rupees because
it can be only 5,000. It can be only 5,000, but whether this 5,000
it does not fall in the range, sir.
Yes. So question says that it will be in the range of 15,000 to 45,000, right? So using the residual value approach, the price comes as a 5,000, which is not looking appropriate, right? Which is not looking appropriate. So in this case, you need to assume or you need to see more. What are the more observable inputs, right? What are the more observable inputs? For example, let's say the more observable inputs is, let's say 15,000 to 45,000. What is median of 15 to 45? Could be 30,000, could be median of 15 to 45, right? So it means 30,000 could be the standalone selling price, right? So 50,000 is product X, Y and Z 50, 30 is product alpha. So what is the total? Total standalone selling price is 130. So what is the transaction price? 1,05,000. Means this 25,000 discount is again going to be allocated between what? X, Y and Z and alpha. Right? Is that clear or not? ये clear है या नहीं है? So question it says that the same fact as in case B applied to case C, except the transaction price is 1,05,000 instead of 130. Consequently, the application of the residual value approach would result in a standalone selling price of 5,000 for product alpha, 105,000 minus 1 lakh allocated to X, Y and Z. The entity conclude that 5,000 would not faithfully depict the amount of consideration to which the entity expect to be entitled in exchange for satisfying the performance obligation in transferring the product alpha. ये इतना heavy language लिखने की कोई जरूरत नहीं है, right? In exam, you simple write that, you know, the standalone selling price of 5,000 is not reflecting a true and fair view for in lieu of transfer of, performance obligation of product alpha or selling the product alpha. This 5,000 doesn't looks appropriate. Okay. Right. Because the range is 15,000 to 45,000. It means to every customer, it has been sold for 15,000 minimum and 45,000 maximum. So consequently, the entity review its observable data, including sales and margin reports, to estimate the standalone selling price of product alpha using another suitable method. So residual value approach is not suitable, then you have to go to the other approach, right? Cost plus margin could be the other approach. Adjusted market assessment could be the other approach. For example, this entity is not selling product alphas individually, but number one, what could be the cost to sell product alpha. For example, this product alpha cost to the company 20,000 rupees. And the company's margin is, let's say, 10%. So what could be the standalone selling price using cost plus margin approach? 20,000 plus 10% margin, 22,000 rupees. Or if this company is not selling product alpha separately, whether the competitor are selling it separately, let's say competitor are selling and they are selling at 25,000 rupees, right? So in that case, 25,000 could be the standalone selling price. Okay. So this is how you need to compute the standalone selling price. Is that clear? Whether this question is clear to all of you?
Yes, sir. Clear, sir.
Completely clear or clear?
So only the case C is unclear. Now is clear after explanation.
Okay. So now it is clear, na?
Sir,
See,
now clear.
Yeah. So again, I'm reiterating. So if the question does not tell you that it is within the range of 15 to 45, then this 5,000 looks appropriate. But when question is telling you this company is selling this product alpha in the range of 15 to 45 and residual approach gives you 5,000 rupees of standalone selling price, is it appropriate? No, it is not appropriate. Hai na?
Yes, sir.
So then what you need to do? If residual value approach is not appropriate, then which approach you will apply? The other ones? What could be the other ones, Prashant?
The cost plus margin approach,
Cost
AMMA
plus
approach.
AMMA approach.
Cost plus margin approach or AMMA approach, adjusted market assessment approach, right? Okay. So let's say in the question, you are not able to apply these two approaches because nothing is given, let's say. Then what you will do? Then you will say that at least using the observable input, it is in the range of 15 to 45. At least 30,000 has to be the standalone selling price, median. You can estimate that. And then your standalone selling price comes out at 50,000 for X. Y and Z put together 50,000. 30,000 alpha. Total is 130. Transaction price is 1,05,000. So this 25,000 discount has to be allocated between X, Y, and Z and what? And product alpha, right? This is how you have to finalize the allocated transaction price. Okay. Is this completely clear to everyone?
Yes, sir.
Yes.
Very good. So this bill and hold arrangement, this question we did, on 18th of May. Service concession arrangement we have also covered on 18th of May. So I'm not covering it again. Second question. Now the next question is, this next question is question number 6 on the volume discount. Variable consideration. Variable consideration, transaction price. You remember we discussed determine the transaction price, which includes fixed consideration, variable consideration, right? So this question talks about the volume discount. Volume discount, which is variable consideration. Element of variable consideration. Yes. Let's discuss this question. ABC Limited supplies plastic bucket to wholesale customers. As per the contract entered into between ABC Limited and a customer for the financial year 1920, the price per plastic bucket will decrease retrospectively. See what is important. This word is important, retrospectively. As sales volume increases within the stipulated time of 1 year. Okay. So if volume will increase within 1 year, your discount will also increase and your value, sales value will decrease. Okay. And what is the price applicability for the entire sales will be based on the sales volume bracket during the year. If the customer is purchasing up to 10,000 units in 1 year, the customer will be charged at 90 rupees per unit. If the customer will increase the threshold of 10,000 unit and customer will buy up to 35,000 unit, for the entire 35,000 unit, the customer will be charged 80 rupees per unit. Right? And if customer will crosses 35,000 unit, right, in 1 year, then for the entire units, the customer will be charged 70 rupees. Okay, the customer will be charged 70 rupees. So this company ABC Limited is a listed company. If ABC Limited is a listed company, then what will happen? If ABC Limited is a listed company, what will happen? They have to report their results on a what? Quarterly basis. So they have to publish their results on a quarterly basis. Okay. So let's say the customer who has purchased, let's say 6,000 unit in the first quarter. Of course, the company has billed for 90 rupees. Okay. But the transaction price has to be determined at the inception of the contract. And now the company has to estimate. So the company knows these are my fixed prices, 90 rupee if it is up to 1,000, 80 rupee if it crosses 10,000, 70 rupees if it crosses 35,000, right? So there is an element of uncertainty. There is an element of variability. Okay. All transactions are made in cash. Suggest how revenue is to be recognized in the books of accounts of ABC Limited as per expected value method, considering a probability of 15%, 75% and 10% for sales volume of 9,000 units, 28,000 units and 36,000 units respectively. For workings, assume that ABC Limited achieved the same number of units of sales to the customers during the year as initially estimated under expected value method for the financial year 1920. What is the ask of the question? The question is asking, there are 50% probability that the customer will buy 9,000 units, 75% chances customer will buy 28,000 units, and 10% chances customer will buy 36,000 units. Okay, so these are the probabilities which are given. For workings, assume. So the question is saying that assume whatever is the expected value outcome, whatever, right? That is the real one. Means जो expected value है actual में वही achieve हुआ. And the question is asking you to compute the revenue and accounting entries and everything, right? So under expected value method for financial year, this. Okay. So how you will recognize the revenue? Tell me, how will recognize the revenue? So applying the expected value method, first of all, you need to apply the expected value method, right? Expected value method. I hope my Excel file is visible to everyone. Whether Excel file is visible?
Yes, sir. Visible, sir.
So applying the expected value method, right? First, you need to, what is your sales unit? What is your sales units which is given? The probabilities are given, na? So sales unit कौन सी है? 9,000, then 28,000 and 36,000. This is given in the question, and probabilities are also given in the question. Probability. What is the probability for these? 15, 75, 15%, 75% and 10%. These are the probability which are given. Now, what is the probability weighted sales value? Sales volume. Probability related sales volume. Probability related sales volume. What is my probability related sales volume? This multiply by this. So as per the expected value, as per the expected value, this company is estimated to sell 25,950 units to the customer. The customer will buy 25,950 units. So this will fall in which bracket? 10,000 to 35,000 bracket. Then what is the relevant price? The relevant price is how much? था ना
80,
10,000 तक 90 है, उसके बाद 80 है, उसके बाद 70 है.
80.
80 is the relevant price, but it is the expected value outcome. So applying the expected value method, you have computed the probability related sales volume unit. You have computed the unit, right? Now, what is the price at which you need to recognize the revenue, right? So while, for example, you said that, 80 rupees my unit, but this is the expected value. It could be higher, it could be lower. So at what value should I recognize revenue? What happens if it will crosses 35,000 units? Then for entire volume, the applicable price is 70 rupee. So the next one is probability related sales value. You need to identify probability related sales value also. Probability related sales value. And how will you identify probability related sales value? So this will give you the per unit revenue recognition price. So how will you arrive at probability related sales value? So let's say sales price per unit. What is my sales price per unit? Just a minute. Tell me, if 9,000 units are sold, what is my applicable price?
90.
For 28,000, what is the applicable price? 80.
80.
For 36,000, 70.
70.
So if I will sell 9,000 unit, I will sell at 90 rupee, and this probability is 15%, right? Likewise, what is my total probability related sales volume? I will receive a total sales value of how much? 20,53,500, and the sales quantity is 25,950. So what is my average unit price? What is my average unit price at which I should recognize revenue? What is my average unit estimated price? My probability related sales value divided by volume. 79 rupees 13 paisa is my average price at which I should start recognizing a revenue. 79 rupees 13 paisa. So what is my first entry? Tell me. So my total expected value unit is 25,950, and my actual outcome is also 25,950. So tell me, for the first 10,000 unit, what is the bracket? The bracket is for first 10,000 unit, 90 rupee cash the customer will pay to the company. And then when it crosses 10,000 unit, then it becomes 80 rupees, right? So what is the first accounting entry? Tell me, what is the first accounting entry? पहली accounting entry क्या होगी? What is the first accounting entry? Bank account debit for the first 10,000 unit. Total unit is 25,950. पर वो ब्रेकेट है ना, तो जब तक वो पहला 10,000 यूनिट जब तक नहीं बिक जाता, तो पहले 10,000 यूनिट तक व्हाट इज द अकाउंटिंग एंट्री? बैंक अकाउंट डेबिट. So for first 10,000 units. Are you getting this or not getting this? Bank account debit. Bank account debit by what value? 10,000 multiply by 90. Okay. ये क्लियर है या नहीं है?
Yes, sir.
To revenue. But at what value the revenue is going to be recognized? So this is at the rate of 90. This amount is at the rate of 90. And this revenue has to be recognized at the rate of 79.13 paisa. Right? So what is the quantity? The quantity is to revenue credit 10,000 multiply by 79 rupee 13 paisa. So amount receive is 9 lakh. Revenue is 791,300. So what is the remaining amount? What is the remaining? This will be a liability to liability. towards customer. This liability will be credited, liability towards customer. And this is the balancing figure, right? So balancing figure or difference between 90 and 79 rupees 13 paisa. Whether this entry is clear or not clear, tell me.
Yes, sir. Clear, sir.
Is that clear?
Yes. Yes.
Priyanka, is that entry clear? I think so. You joined late, so probably you have not even seen the question also, right? Yes. So what we did, revenue recognized on the sale of being, revenue recognized on the sale of first 10,000 units, right? Then what happened on the next? So the total is 25,950. So then in the next 15,950 units. For next 15,950 units. 15,950 units. What happened for the next 15,950 units? Bank account will be debited. So bank account will be debited. So bank account will be debited by how much?
At the rate of 80 rupees.
At the rate of 80 rupees. Very good. Now the eligible amount is 80 rupees, right? So this customer must have adjusted the earlier amount also. Yes or no? The customer told that, see, now I have purchased 25,950 units from you. My applicable price should be 80, right? And what I have paid you earlier? What I paid you earlier? 9 lakh rupee. So when the customer crosses 10,000 unit and customer purchased 15,950 units after 10,000. So customer told, see, on my entire 25,950 units, applicable price is 80 rupees. Yes or no?
Yes, sir.
Yes. So my total liability is 25,950 multiplied by 80. But I have already paid you how much? 9 lakh?
9 lakh to be reduced.
Yes. So this entity will receive 11,76,000, right? To revenue credit. At what value to revenue credit? At what value? 79.13 or 80? Technically. So let's say this is the year-end closing entry. The total outcome is 25,950 only. So applicable revenue has to be adjusted at what value? 80 rupee. 80 rupee पे तो आना चाहिए ना revenue.
Yes, sir.
Yes or no? 80 पे आना चाहिए नहीं आना चाहिए. Or for example, let's say we'll keep it at 79.13. So what is my revenue? 15,000 multiply by 79 rupee 13 paisa. Okay. So I of 1186,950. So then what will be debited? Liability towards customer will be debited. Liability towards customer debit. So customer debit. What is the balancing figure? This minus this. 10,950 will be debited. This is the balancing figure. Now the customer has to pay you cash. You have to receive a bank for 15,000.
So this figure will come 1276. Bank.
Yeah. See, so I'm coming to that. So what is your, so ideally, what should be your full numbers? What should be your full numbers? What should be your total numbers in the financial statement? What is the total amount of bank? How much unit is there? 25,950 lakhs revenue. What should be your revenue? Technically, your
recording in progress.
Yeah. reversal of liability. Alternatively, what you can do? Alternatively, what could be the alternate entry? Alternatively, can I write alternative entry also?
Yes, sir.
Okay, let me write this. The first entry, there will not be any change. No change in the first entry. There is no change in the first entry. कोई चेंज नहीं आएगा ना फर्स्ट एंट्री में तो. फर्स्ट एंट्री में तो जब तक 10,000 यूनिट नहीं होता है तब तक तो आपको इसी वैल्यू पे रिकॉग्नाइज करना पड़ेगा, है ना. दिस इज व्हाट मनी यू विल रिसीव. बट व्हाट अबाउट द नेक्स्ट 15,950 यूनिट? Again, how much money you will receive? 25,950 multiply by 80 you are entitled, minus already received 9 lakhs 1176. Okay. And what should be your total revenue? Tell me what should be your total revenue. Your total revenue should be 25,950 multiply by what? 80 minus the revenue which you have already recognized, which is 791,300. So this should be your total revenue, yes or no?
Yes, sir.
So your total revenue you have credited 1284,700, but you received in your bank 1176. So where the difference will go? What will be debited? 1284 minus say 1176.
Liability towards
customer. Right. So this is the alternative entry. This entry looks fine, right?
Yes, sir.
Yes or no?
Yes, sir.
Yeah. So you need to give a catch-up adjustment, right? Okay. So I hope this is clear to everyone that we have computed what should be my average estimated sale price after considering the variable consideration. Now, friends, so we have completed part A of this question. Now, what is the part B? There's the other one also. So question number 2 say that in question number 1, it is an expected value approach. In question number 2, in case ABC Limited decide to measure revenue based on most likely method instead of expected value method. अगर मैं most likely method पे जाऊं, so 15% probability is 9,000 unit, 75% probability is 28,000 unit, 10% probability is 36,000 unit. So what is the highest chances?
75%.
75%. And what are the units? 28,000 units. So going by the most likely method, it is 28,000 unit, right? So it is written that how will be the revenue recognized in the books of ABC Limited based on above available information. For working, assume that ABC Limited achieved the same number of unit of sales, which is the applicable, what is the applicable price per unit? This 10,000. So 10,000 for next 18,000 unit. I'll give you. So what this entity will receive? This entity will receive, the customer will say that, now I have crossed a limit of 10,000. So what is applicable to me? 28,000 multiply by 80. And what I have already given you? 9 lakh rupees. So lakhs. I'll only give you 13,40,000 now at the rate of 80. What should be my revenue?
Recording
These
in
are the journal
progress.
entry we have already discussed. These journal entries, right? Yes. Is that clear or not clear?
Yes, sir. Clear, sir.
Clear in mind or clear from mind?
Clear in mind.
Clear in mind. Very good. Yes. So friends, we did 2 questions. So one question we did on allocation of transaction price. And this question we did on variable consideration, which is volume discount. Right? So it's 7:25 now. Let's have a 10 minutes break. 7:25 to 7:35. And we'll continue our journey in learning Ind AS 115 at 7:35. Right? Perfect?
Yes, sir. Perfect.
Shall I start, friends? Let's start.
Yes.
Yes, so we discussed this question on volume discount also, right? Now let's do a question on question number 7. Yes. And this question number 7 is on, significant finance component also. So how you will recognize the revenue when the goods are sold on credit for more than a year? Good question. So this question will cover finance component, means income, finance income, means there is a finance income in addition to revenue. A Limited is a company which is in the business of manufacturing engineering machines and providing after sale services. Okay. So this company is in the business of manufacturing machines, and this company is also providing after sale services. The company entered into a contract with Mr. Anik. Mr. Anik is a customer. It could be Prashant, it could be Saminathan, it could be Salesh, it could be Priyanka, it could be Rahul, anyone, right? So this is a customer name. To supply and install a machine, right? So this company entered into a contract with the customer to supply the machine and to install the machine. Okay. Namely Model Pi. So this is the name of the machine, right? On 1st April 2018. So this company is engaged in the business of manufacturing machines and providing after sale services. So this company entered into a contract with a customer to supply and install the machine. Okay. On 1st April 2018. And to service this machine on 30th September 2018 and 1st April 2019. So this company enters into a contract with the customer to supply, to install, and to provide after sale service. So the first one is on 30th September 2018 and the second one is on 1st April 2019. So 3 dates are important. 1st April 2018 is the date when this company has sold the machine and the company has delivered and supplied the machine. And the first service happened on 30th September 18 and the second one is 1st April 2019. The cost of manufacturing the machine to A Limited was 1,60,000. Why this is relevant? Why this cost of manufacturing is relevant generally? Why the cost of goods sold is relevant? Any reason for this? When you recognize sales, when you recognize revenue, you need to recognize cost of goods sold also, right? Your true profit in the P&L will arrive only after deducting the cost of sales from revenue. Yes or not? Let's say Tata Motors, the dealer of the Tata Motor is selling a Tata Nexon car to you on 12 lakh rupees for 12 lakh rupees. So whether the 12 lakh rupees entire profit? No. So they are recognizing the revenue from operation 12 lakh rupees and they are also recognizing the cost of goods sold, cost of sales. For example, 11 lakh 60,000 rupees. Generally, these dealers, they are getting a margin of 20,000, 30,000 rupees, 40,000 rupees on sale of a car, right? On sale of a single unit. So they will recognize your top line, the revenue from operation of 12 lakh and cost of goods sold at 1160. Okay. It is possible for a customer to purchase both the machine and the maintenance service separately. So the customer can purchase the machine and the maintenance service separately also. Mr. Anik is contractually obliged to pay A Limited on to pay A Limited 4 lakh rupees on 1st April 2019. Two things. What is the transaction price here? 4 lakh rupees. And when this customer will pay this 4 lakh rupee? When this customer will pay 4 lakh rupee, Priyanka?
1st April 2019.
1st April 19. And when this customer has purchased this machine?
1st April itself.
No, 1st April is there, but 1st April, what 1st April? 18 or 19?
18.
1st April 18, right? So the company sold the machine on 1st April 18. The customer purchased the machine on 1st April 18, but the customer is paying the consideration on 1st April 19. It means the machine is sold on credit for more than 1 year or for 1 year or more, right? The prevailing rate, and what is the purpose of this line? It is possible for customer to purchase both the machine and the maintenance service separately. These are the two separately identifiable performance obligations, right? These are the two performance obligations. So 4 lakh rupees is the transaction price. Cost to sell is 1,60,000. Contract is for machine and service both, right? And this customer is paying on 1st April 19. The prevailing rate for 1 year credit granted to trade customer in the industry is 5% per 6-month period. What is this? What is this? Now it says that normally in the industry, the company which is giving a credit for 1 year, so they are charging 5% interest in every 6 months. So what is per annum? 10%. So 5% is on 6 monthly basis. As per the experience, the servicing of the machine sold to Mr. Anik is expected to cost A Limited 30,000 to perform the first service and 50,000 to perform the second service. So the total transaction price of machine plus first service plus second service is equal to 4 lakh rupee. Okay. The total money which the customer Mr. Anik will pay on 1st April 19 is 4 lakh rupee, and this includes everything. इस 4 लाख रुपए में क्या क्या आ गया? इस 4 लाख रुपए में मशीन का पैसा, 4 lakh rupee is for machine, for first service, for second service, and for what? And it also includes
Finance cost.
Finance income, right? It also includes finance cost, or for the company it is finance income. Okay, very good. So 1,60,000 was the cost of goods sold for the company, and cost to perform service is 30,000 and 50,000 for the company, right? Assume actual cost equal expected cost, and whatever is the expectation, this is the actual cost also. When A Limited provide machine service to customer in a separate transaction, it earns a margin of 50% on cost. When A Limited provides machine services to customers in a separate transaction, it earns a margin of 50% on cost. Means, what is the relevance of this line? What is the relevance of this line?
For maintenance cost 30,000 and 50,000, we need to include the margin also.
See, if you see, the total transaction price is 4 lakh rupee. And for total transaction price, there are 3 performance obligation. Rather 4 performance obligation. The first one is sale of machine. The second one is first service. The third one is second service, right? And the fourth one is finance income. Means the company, this company is also funding to the customer, and hence the finance income is also there. So there are 4 performance obligations. For finance income, 5% rate per 6 months is given. But what is the standalone selling price of these services? It is not given. But what is given? Cost is given. Cost is 30,000 and 50,000. So the margin is given 50% on cost. It means the standalone selling price, the revenue, the standalone selling price is arrived by factoring a margin on this 30,000 rupees of cost. By applying a cost plus margin approach, you can find standalone selling price, right?
Yes, sir.
Right, okay. On 1st April 2018, the cash selling price of the machine to the customer is 251,927. What is the relevance of this line?
This is minus the finance cost.
Yes. So basically, if Prashant would have gone to this A Limited and would have told, see, I need to purchase this Model Pi, right, on a cash terms. So Prashant would have paid 251,927 and he would have got the machine, right? So what is the cash selling price of the machine? 251,927 is the cash selling price of the machine, right? So revenue has to be recognized at cash selling price. So 251,927 is the cash selling price of the machine. The promised supply of machine, Model Pi and maintenance service obligation are satisfactorily carried out in time by the company. You are required to segregate the component of the transaction that A Limited shall apply to the revenue recognition criteria separately as per Ind AS 115. Calculate the amount of revenue which A Limited must allocate to each component of the transaction. Prepare journal entry to record the information set out above in the books of accounts of A Limited for 31st March 19 and 31st March 20, and draft an extract showing how revenue could be presented and disclosed in the financial statement of A Limited for the year ended 31st March 19 and 20. So this question is asking you everything. This question is asking you, you need to segregate the component of the transaction, right? And you need to tell that how revenue recognition criteria will be there. Okay. What should be the amount which has to be allocated to every component? You need to pass the journal entry and you need to show the relevant balance sheet and P&L extract also. Okay. Right. So in this question, one thing is very clear. There are 4 performance obligations: sale of machinery, first service, second service, and the finance income. These are the 4 performance obligations. Yes or no? These are the
Yes,
4
sir.
performance obligations, right? So you can say 3 भी बोल सकते हो, 4 भी, लेकिन 4 चीजें हैं. पहली सर्विस, दूसरी सर्विस भी है, right? So goods, services, and finance income. Okay, this is right. Okay, so let me explain this question on the Excel file. Shall I use Excel file in explaining this question? Okay. Question number 7. 1st April 18. 1st April 18. What happened on 1st April 18? क्या हुआ 1st April 18 को? Machine. This machine was sold. What is the cash selling price of this machine? 251,927. This was the price. 251,927. Right? 251,927. Yes or no?
Yes, sir.
Yeah. Is there anything which has happened on 1st April 2018? Anything which happened on 1st April 2019? 1st April 2018?
If that machine is sold to, okay, and the cost is there, cost of the machine is given.
So basically this is sale price, this is sale price of the machine, and what is my cost of goods sold? Cost of goods sold is
1,60,000.
So this is what it is there, 1,60,000. So can we write like this? This is the revenue and yeah. So this is the revenue and this is the cost. Okay. Sale price and cost of goods sold. Okay. Correct. Then what happened next? What happened next? What is the next date? What is the next date? The date of the first service. When the date of the first service is due? 30th September 2018 is the next date. What happened on this date? First service. क्या होगा फर्स्ट सर्विस पे? What is the cost of the first service? Tell me, what is the cost of the first service? कुछ लिखा था ना, cost लिखी थी ना, 30,000 was the cost of the first service.
Second service 50,000.
नहीं, पहले सर्विस की कॉस्ट कितनी थी? 30,000 थी ना?
Yes, sir.
The cost of the, so if the cost of the first service is 30,000, what is the revenue? What is the revenue?
15% margin.
Revenue is 50% margin, 45,000 is the revenue. Yes. And this is the cost. Then what happened on 30th September 2018? One more thing will happen. What happened on 30th September 2018? Interest income. Interest income भी तो होगी 6 year, 6 monthly. There is a half yearly 5% rate of interest. Yes
sir.
or no?
Yes, sir.
Interest income. Interest income. Okay. So with all these transaction, tell me customer account will be debited or not? इन सब ट्रांजेक्शन से कस्टमर अकाउंट डेबिट होगा या नहीं होगा?
Yes, sir.
So what is the accounting entry on 1st April 18? Customer account debit, Mr. Anik account debit to revenue 251927. Since the customer is paying money after 1 year, so customer account will be debited, trade receivable account will be debited, right? Then what happened on 30th September? Of course, then there is a cost to sales which you have to incur. Okay, so you need to transfer this cost to P&L. Then on 30th September, what is the accounting entry? Again, service. So what is the accounting entry? Customer account debit to revenue, and then you need to incur a cost also. Customer account to debit hoga na? Then there is a interest income. With interest income, customer account will be debited or not? Interest income होगा नहीं होगा? कितने से होगा? What is the amount of revenue? What is the amount by which customer is getting debited? 251927 multiply by 5%. 12,596. Any doubt? Any doubt on this transaction? Any doubt on this 12,596?
No, sir.
So customer account will again debited by 12,596. Entries: customer account debit to finance income, to interest income, whatever. Okay. Then what is the next date? 1st April 2019. What happened on the 1st April 2019?
Receipt of money.
नहीं, उससे पहले सर्विस भी तो है.
Yeah.
Second.
पहले 6 महीने का इंटरेस्ट भी तो है.
Second service 50,000.
Yes, second service is also there. Interest will also due now for next 6 months.
Yes, sir.
So interest income. Interest income on which amount? कौन से अमाउंट पे होगी इंटरेस्ट इनकम? Tell me,
Including-
interest income on which amount?
Including maintenance cost. Maintenance.
Including maintenance cost and including previous interest also. What is the amount? What is the amount lying in the customer account on 30th September 18? Cumulative balance कितना होगा customer account में? कितना हो गया cumulative balance?
2,51,000.
भाई customer account आप debit कर रहे हो, you are debiting your customer account. What is your cumulative balance? 251,927 plus 45. 296,927 plus
3,09,523.
So how much is the interest income? 3,09,523 multiplied by 5%. 5% is the half yearly rate. Okay, you are not required to do 6 by 12. This 5% is for 6 months only. Okay, it is not annual. Right? So your customer is debited by 15,476 and this is your closing balance, cumulative balance. Then what happens on 1st April 2019? Second service. Second service भी तो होगी ना? What is the cost
sir.
of the second service? Saminathan, you were telling me?
50,000.
Yeah, 50,000. 50,000. Cost of the service
If
50,000.
50,000 is the cost, what is the revenue? If 50,000 is the cost, 50% margin you need to factor. 75,000.
75,000.
sir.
With this 75,000, customer account will get debited. So what is my total balance in the customer account? So what is the next entry?
Receipt of payment.
Yes, cash received. How much cash received from the customer? How much cash
4
received
lakh.
from the customer? 4 lakh.
4 lakh.
4 lakh. So what is the closing balance of the customer?
0.
Is this clear to everyone? Should I write accounting entry also or should I call accounting entry?
It's
For
clear.
sale of machine, what is the accounting entry? Customer account debit. So these all are debit. These all are debit, right? This negative means credit, right? Okay. मैंने आपको अकाउंटिंग एंट्री भी बोल दी है. Yes. So for this machine, customer account debit, Mr. Anik account debit to revenue account 251927. For service, customer account debit to revenue 45,000. For interest income, customer account debit to finance income 12,596. For another interest income, customer account debit to finance income 15,476. For this service, customer account debit to revenue 75,000. For money received, bank account debit to customer 4 lakh rupees, right? So this is the accounting entry. Is this clear to everyone? Have you found this question useful? While it looks like it's a very simple question, but when you see this question directly in exam, probably you will not be able to, complete, or you will not be able to 100%, solve this question correctly. Either you will get stuck in interest income, right? Either you will apply 5% multiply by 6 by 12. The key is this 5% is for 6-month rate, right? Or you will simply apply 251,927 for 6% for 6 months, which is 5%, right? So this is what it is there. I hope it is clear to everyone, friends. Clear, not clear?
Yes, sir. Clear, sir.
Clear? Very good. Perfect. Yes. So this is the, the answer which is there in the word file. This is what I have told you. This is the accounting entry which I have explained you, right? And this is the 1920 and 2819. So in 1819, sale of goods revenue is this much. The machine revenue is this much. This is the finance income. Okay, this is the finance income revenue. So how this 28,000 came? That 30th September and 31st March interest, of course, right? Okay. And this 75,000 is the 1st April 19 service revenue. Okay. Is that clear? So now let's come to question number 1. With this, I will complete all the 8 questions of which is given by BOS of ICAI. Question number 1. This question number 1 is again a unique question. What is this question number 1? This question number 1 is on, when there is a work in progress, right? As you are aware, for the purpose of construction contract, the construction contract are for longer period or for turnkey project, right? These are for longer period where the company used to incur the cost and the customer also pay the money continuously. So how the revenue is going to be recognized? So generally there are method like input method, output method, where you measure the progress of the work. For example, let's say there is a 5-year contract, for example, and the total estimated cost is 1 crore, right? So in the first year, the company has incurred 20 lakh rupee of cost. The budgeted cost, estimated cost of completion is 1 crore for the entire project over a period of 5 years. And in the first year, the company has incurred a cost of 20 lakh. So what you will say? What is your percentage of completion?
20%.
20%, which is cost incurred divided by total cost. Cost incurred divided by total budgeted cost. Okay. So which is 20 lakh divided by 1 crore. So 20% will come out as a cost. Okay. So just allow me a minute. Right? So 20%. So this is, this is input method. Okay. So this is how the percentage of what revenue is going to be recognized. So let's say 20% can. And this is the cost. Estimated cost is 1 crore. But of course, the revenue should not be 1 crore, because if the entity is incurring a cost of 1 crore, revenue should be more than 1 crore technically. So let's say total transaction price is 1.5 crore. Total transaction price. So what should be the revenue in the first year? Applying this percentage of completion on the basis of cost incurred. If the transaction price is 1.5 crore, then what should be the revenue in the first year? रेवेन्यू क्या होगा, फटाफट बताओ. नहीं बताना तो चैट बॉक्स पे लिखो. प्रशांत, what should be the revenue in the first year? Assuming,
I couldn't get the question. Can you get the question?
sorry.
I couldn't get the question.
So let's say the company has, so basically there is a 5-year term. Okay. So there is a contract which will span over 5-year period. Okay. So the total transaction price is 1.5 crore. The total estimated cost is 1 crore. And the entity has incurred a cost of 20 lakh in the first year. So my question was, what is the percentage of completion in this case? How you will arrive at a percentage of completion? So actual cost incurred divided by the total cost. So you can assume that 20% work has completed. Right?
Yes, sir.
Right? So if 20% work has completed, this has given you the cost incurred divided by total cost has given you the percentage of completion. Okay. So now if you apply this percentage of completion, which is 20% on the transaction price, so how much revenue you will recognize?
1.5 into 20%.
1.5 CR multiplied by 20%. Transaction price multiplied by 20%, 30 lakh. So 30 lakh is revenue, and what is cost? 20 lakh. So what is your margin in the first year? What is your profit in the first year? 10 lakh. Right? So this is the concept which I was, just discussing with you. Now let's read the question. An entity has a fixed fee contract. What is this? Fixed fee contract. Fixed consideration. Can I say it as a fixed consideration? Of how much? 10 lakh. 1 million is 10 lakh. An entity has a fixed fee contract for rupees 10 lakh to develop a product that meets specified performance criteria. Estimated cost to complete the contract is 9,50,000. What is my fixed consideration? What is my fixed revenue transaction price? What is my fixed transaction price? 10 lakh. And what is my estimated cost to complete the contract? 9.5 lakh. What is the total profit over the contract?
50,000.
50,000 after reading the 2 lines. Okay. I'm not concluding. So 50,000 after reading these 2 lines. Okay. The entity will transfer control of the product over 5 years. So this entity will transfer control of product over the 5-year period. Not after 5 years. It is continuously transferring the control over 5 years. And the entity uses the cost to cost input method to measure progress on the contract. What is meant by cost to cost input method? क्या मतलब है इसका? What is meant by cost to cost input method? Sorry, I didn't realize that my so I was on mute. Priyanka, what is meant by cost to cost input method?
To allocate the expense on the basis of estimated cost.
Yes, so cost to cost input method means you are evaluating the performance, the percentage of completion of the work on the basis of cost, right? On the basis of cost. Okay.
Yes.
So as I told you, the total cost is 9.5 lakh. So if let's say I'll tell you that in the first year, the actual cost incurred is 1 lakh, then what is the percentage of completion? 1 lakh divided by 9.5 lakh, right? Almost 10%, 11% almost. So an incentive award is available if the product meets the following weight criteria. What is this? Incentive award. What is this? This is
revenue.
हाँ revenue तो है, but is it fixed revenue?
Variable.
It is a variable, sir.
This is variable consideration in addition to 1 million rupee. So this is in addition to 10 lakh rupee. This is not including 10 in, this is not included in 10 lakh rupee. This is in addition to 10 lakh rupee, right? This is a variable consideration. And the incentive is available if the product meet the following weight criteria. If the weight is 951 kg or greater, the company will not receive any incentive. It will be zero. Okay. If the weight is between 701 to 950, the company will be able to get the 10%. मतलब fixed का 10%. So fixed का 10% का मतलब the company will get an incentive of 1 lakh rupee. If the weight of the product is 700 or less, the company will be able to get the variable consideration, which is incentive of 25% of 10 lakh, which is 2.5 lakh. Okay. So the entity has extensive experience creating products that meet the specific performance criteria. And based on its experience, the entity has identified 5 engineering alternatives that will achieve the 10% incentive, right? And 2 that will achieve the 25% incentive. So this company has found some alternative. And what these alternatives are telling? So the 5 alternative is saying that this company will be able to receive 10% incentive. 10% incentive means 1 lakh. And there are 2 alternatives which are saying what? That the company will be able to get 25% incentive, right? So if I'll apply this in percentage term, means out of 7, 5. So out of 7, what is the percentage of 5? So 5 divided by 7 is around 75%, 75%, right? So
Yes,
can we take 70%? So 70% chances that the company will receive 1 lakh rupee incentive, and there are 30% chances that the company will receive 2.5 lakh incentive. Okay. In this case, the entity determined that it has 95% confidence that it will achieve 10% incentive, and the company has 95% confidence. Matlab, almost 100%. The company is demonstrating that the company is able to receive 1 lakh rupee as a variable consideration. Okay. And there are 20% chances that the company will receive 25% incentive. Based on the analysis, the entity believes 10% to be the most likely amount. So most likely amount, ज़्यादा chances किसके हैं? 70% chances किसके हैं? 10 या 25 के? 10% incentive के. So there are 75% chances that the company will be able to receive 10% incentive, right? So 1 lakh rupee का chances कितना है? 1 lakh rupee का chances है 75%. Okay. So most likely approach, it is 1 lakh rupee. Therefore, the entity includes only 10% award in the transaction price when calculating revenue, because the entity has concluded that it is probable that a significant reversal in amount of cumulative revenue recognized will not occur. Okay. When the uncertainty associated with the variable consideration is subsequently resolved due to its 95% confidence in achieving the 10% award. इस पूरी लाइन में, इस पूरे पैराग्राफ में what is relevant? What is relevant in this complete paragraph? What is relevant in this complete paragraph? Only the first line, right?
Only the 10% will be achieved. 1
yes,
lakh
10% will be achieved, and the rest is only story.
story.
And this story is paragraph which is covered from the standard. And what it is saying, that the company has a due to the 95% confidence, the company is saying when this uncertainty will resolve, matlab, when the final product will come, right? When the actual weight will come. So there is a very less chances that this 1 lakh rupee of variable consideration, which the company is taking from day one, it will be reversed. So this is the crux. Okay. So at times when you solve question, you will find the big paragraph does not have any impact, right? It may be there to dilute you. The entity reassesses its production status quarterly to determine whether it is on track to meet the criteria for the incentive award. At the end of year 4, 1, 2, 3, 4, it becomes apparent that this contract will fully achieve the weight-based criterion. This contract will fully achieve the weight-based criterion. Okay. Therefore, the entity revises its estimate of variable consideration to include the entire 25% incentive fee in the year 4, because at this point it is probable that a significant reversal in the amount of cumulative revenue recognized will not occur when including the entire variable consideration in the transaction price. What is the crux of this 6 lines?
Then the entity is certain to achieve that 25%, then 2,50,000 incentive will be coming.
So from year 1, 2, 3, it was estimated that only 1 lakh will be achieved. But at the end of year 4, due to the development in the product, now it becomes certain almost that the company will be able to receive 25% incentive. Okay. ये variable consideration था ना, and variable consideration keeps on changing, right? So evaluate the impact of change in variable consideration when cost incurred is as follows. Now, year-wise cost is given. In the year 1, cost incurred is 50,000. Year 2, 1,75,000. Year 3, 4 lakh. Year 4, 275. Year 5, 50,000. What is the total of this cost incurred? What is the total of this cost incurred? इसका total क्या होगा?
9,50,000.
9,50,000. ये फर्स्ट लाइन में तो दिया था. 9,50,000 is the total of cost incurred. 9,50,000. Okay. Correct. So now what I need to do? Now I need to tell you the revenue which has to be recognized over the year and the cost which is going to be recognized. Okay. Shall I show you this question on the Excel file? Yeah. Year 1, 2, 3, 4.
Yes, sir.
Yes. Okay. Question number 1. Question is clear to everyone? Yes or no?
Yes, sir. Clear, sir.
Yes.
Okay. So question is clear. I hope my Excel is also visible to everyone.
Yes, sir. Visible, sir.
Yes. So what are the facts in the question? Fixed transaction price. What is my fixed transaction price? 10 lakh rupees. 1 million.
10 lakh. 1 million.
Sorry. ₹10 lakh is the fixed transaction price. What is my fixed cost? So this is the revenue transaction prices. What is my fixed cost? 9,50,000.
9,50,000.
Right. What is my variable consideration? So this is my fixed consideration. I'll write this as a fixed consideration. What is my variable consideration?
What
is my variable consideration?
2,50,000, sir. 2,50,000.
Year 1, 2, 3, 1 lakh.
1, 2, 3, 1 lakh.
Yes. But what happened in year 4 and 5?
2,50,000.
4 to 5, it becomes
250,
right? This is the question. This is what the question talks about, right? And year wise, costing is given, right? And the method of measuring the progress is cost to cost method. Means the cost incurred divided by the total cost, right? So now we need to see that what should be my revenue recognition, what should be my cost, and what should be my profit. Okay. So let me write year 1, year 2, year 3, year 4, and year 5. Year 1, 2, 3, 4, 5, and this is your particulars. Okay. So first of all, what is my percentage of work completion? What is my percentage? How do I compute my percentage of work completion? Can I compute by cost? So what is my cost? If I need to compute the percentage of completion, what is my cost which is incurred? Year 1, what is the cost? In year 1, the cost is 50,000. 50,000 in year 1, 1,75,000 in year 2, in year 3, 4 lakh, 2,75,000, and year 5, what is there in year 5?
50,000.
What is my total cost?
9,50,000.
9,50,000 is my total cost. So what is my percentage cost incurred? Right. So what is my percentage of completion? 50,000 divided by 9,50,000. Okay. So what is my percentage of completion? 5% is my percentage of completion. I hope my Excel is visible to everyone, right?
Yes.
Yes, sir. Visible, sir.
5% is my percentage of completion. Yes or no?
Yes, sir.
Yes. Now in year 2, what is my percentage of completion in year 2? Up to year 2, you need to see cumulative, right? You need to see cumulative.
23%, sir.
Up to year 2, my percentage of completion is how much cost is incurred? This plus this divided by this.
23.42.
This is cumulative, right? It is clear to all of you, no? This is cumulative. Ye cumulative.
Yes,
okay. So 24%. So let me write here cumulative also. Cumulative. Okay. And percentage of completion yearly. What is yearly? Yearly is 5%, and this is 24 minus 18%. Okay. And year 3, this plus this plus this
65.79.
divided by 950. Okay. So this is just a minute. $66 minus. Okay. And then equal to sum of these 4 numbers divided by 9,50,000. Okay.
95%.
Right. So 95 minus 66, and then 100%. Can I write 100%? Up to 100 ही होगा
Yes,
ना?
sir. Yes, sir.
This minus this. So I hope this is clear to everyone, right?
Yes, sir. Yes,
So
sir.
now my transaction price. Now I need to recognize my revenue. Okay. So what is my fixed revenue? Now I need to recognize my revenue. In revenue, my fixed consideration. Okay. So what is my fixed revenue? 10 lakh multiply by what? 5%. Can I apply this yearly wala? Okay.
Yes, sir.
Then 10 lakh multiply by 18%, this one. Or alternatively, what I can do, 10 lakh multiply by 24% minus whatever I have recognized earlier. Correct?
Yes, sir.
Yes, sir.
I hope you guys are able to understand this. ये yearly और cumulative आपको clear है ना? So there are two ways. आप ये भी कर सकते हो. What you can do, 10 lakh multiply by 24% minus whatever you have recognized. The answer would be same. ठीक है ना? Or
Yes, sir. Yes, sir.
simple, what you can do, because I have computed yearly also, simple, you can do this also. Okay, then 10 lakh multiply by 42%. Yes, correct. Then 10 lakh multiply by 29% and 10 lakh multiply by, इसका टोटल कितना आना चाहिए? इसका टोटल शुड बी 10 ही आना चाहिए. 10 lakh, इसका टोटल 950 आना चाहिए. So this is my fixed consideration. This is my revenue.
Why is it coming 52,632 when we take 10 lakhs of 5% of 10 lakhs?
Yes. Sorry, Prashant, what is your question?
So how is it coming 52,632 when we take 5% of 10 lakh?
So it is exactly not 5%. So let me put this into 2 decimals, right? So this is
Okay, sir.
this is the percentage, Prashant. This was rounded off, right? Yeah. So what is
Yes.
the cost? These are the costs, right? So let me write the cost here. Ye costing. There is a variable consideration also. What is the variable consideration?
Incentive.
1 lakh for 3 years.
So in the beginning, it was estimated at 1 lakh. So let's say, what is my variable consideration which I have expected? Variable consideration. So I have expected my variable consideration at 1 lakh rupee in the first to third year, right? Cumulative. So cumulative. It is not yearly. ये cumulative है, right? 1 lakh. But when I reached to year 4 and year 5, I got that it should be 2,50,000. It should be 2,50,000. Perfect. है ना?
Yes, sir. Perfect, sir.
So this is my P&L. So let me statement of P&L, profit and loss. तो ये नीचे वाला जो है मेरा, ये statement of profit and loss है. So that you will be able to understand the difference. The above one is information and the lower one is P&L. Okay. Perfect. So my variable consideration is 1 lakh multiplied by how much? 5.26%. Is that okay, Prashant?
Yes, sir.
Yes, sir. Perfect, sir.
Okay. Then again, 1 lakh multiplied by, see, 1 lakh multiplied by, so 1 lakh is the total, right? So 1 lakh multiplied by 18 point, it is not yearly, it is cumulative. That is why I have written cumulative. एक साल का नहीं है, वो पूरे 5 साल का है. So when you entered into the contract, your estimate was I will receive an award of 1 lakh rupee. When you complete 1 year, again your expectation is same. When you complete second year, again your expectation is same. When you complete third year, again your expectation is same. But when you complete fourth year, then your expectation got changed. Then you thought that, oh no, due to my performance, now I will get how much? I will get 25%. Okay. I hope this is okay to everyone. Right? This is my variable consideration.
Yes,
Now,
sir.
what about year 4? In
Year
year
four-
4,
Now the value is changed to 2,50,000.
2,50,000. What should be the revenue which has to be recognized?
And for year 4 and year 5, based on the percentage, we need to reverse the incentive recognized earlier.
So, see, in the last 3 years, the expected variable consideration was 1 lakh and hence revenue has been recognized at 1 lakh multiplied by 5%, 18%, 42%. Right? But this should have been estimated at 2.5 lakh, right? So if the total contract, if for total 5 year, the variable consideration is 2.5 lakh, what should have been the revenue which has to be recognized? 2.5 lakh multiply by 95%, because up to the end of year 4, 95% work has been completed. Yes or no?
Yes.
But I have already recognized how much? 5263 minus this, right? Okay. So your revenue recognition is 1705. I hope you are clear on this. Yes. And in the last year, what should be your revenue recognition? 2.5 lakh multiplied by 5.26%. So there is a catch-up adjustment come in the year 4. Yes or no? The total should be 2.5 lakh. See, it is 2.5 lakh. Right? So there is a catch-up adjustment in this 171053. There is a catch-up adjustment. ये catch-up adjustment क्यों आई? Or if I'll say this as a catch-up adjustment, right? If I'll say this as a catch-up adjustment, 171053, 2.5 lakh multiply by 28.95%, right? Or simply what I can say, 1 lakh multiply by your 20 whatever is this 28.95%, right? Or let's say on this year only you need to apply 2.5 lakh multiply by 28.95%, but it has to be 2.5 lakh multiply by this much percentage minus this and this. So alternatively this total is 171053 only. Is this clear or not clear? ये clear है या नहीं है? So the total is 2.5 lakh. Is that clear or not clear?
Yes, clear.
दोनों में से जैसे मर्जी कर सकते हो, ठीक है? So this is your cost. Now, what is your margin? What is your profit? This is your total revenue. This is your cost. Now, what is your profit? क्या होगा profit? This is your total revenue. This is your, right? And this is your total profitability. Is it clear to everyone? Yes or no? Is it clear to everyone? Yes or no?
Yes, sir. Clear, sir.
Clear? Completely clear? Yes?
Yes, sir. Completely clear, sir.
Very good. Yes,
So these
Priyanka,
are
you have a
not there
question?
in the module. Today's questions were not there in the module, sir.
Sorry?
I was just looking at the module, sir. These questions were not there in the module.
Yeah, so Board of Study of ICAI has already uploaded this Word file which I have shown you. So Board of Studies has already uploaded on the portal, right? And as I told you earlier, so the question is not only from ICAI study material, the question is also from RTP and past examination question paper also, right?
Right, sir. Thank you.
So the good part is the Board of Studies has already shared the question along with the answer, right? But the answer is more like, it contains so many paragraph number, detail. So, but in examination, of course, you don't need to copy paste like, the answer which is framed, because the answer which is given in the book and the answer which you are writing in your exam booklet, so both are different. Okay. The outcome is same. The intent is same. The objective is same. Outcome is same. But the way you are solving the question is different. For example, if I'll show you, I hope the Word file is visible. So if I can show you, this is the solution which is there, right? And how I have solved? I have solved this way. This cumulative, yearly. This is more clear, more neat, and this is what you able to understand it very well, right? Yes?
Yes, sir.
Yeah.
Yes, sir.
So friends, now, yeah, Priyanka, you were asking something. Priyanka, you were saying something?
I just told sir it's all clear, sir. Yes, sir.
Okay. So let me, I have covered all 8 questions from this 5-step model. So now let me, cover one more question, which is on performance obligation, right? Yes. This one. Entity enters into a contract to manufacture and install customized equipment. The word is customized equipment, and provide maintenance service for a 5-year period. So entity enters into a contract to manufacture and install, okay, supply and install customized equipment and provide maintenance service for a 5-year period. So there is a supply of equipment, installation of equipment and maintenance service for 5 years. Installation service include the integration of multiple pieces of equipment at the customer's facility in order for the equipment to operate as a single unit. What does it mean? So after reading the second paragraph, do you think that this installation is as simple as installation of air conditioned TV and refrigerator?
No.
High level of integration is required, right? And it requires integration of multiple pieces of equipment. Equipment cannot operate without installation, means installation is mandatory, and it requires high degree of engineering, it requires high degree of expertise, because it requires high degree of integration. Okay. Entity sells equipment and installation services together. So entity sells equipment and installation services together, does not sell installation separately. However, other vendors can provide the installation services. So what this line talks about, other vendors can provide the installation services. What this line talks about?
Customer can get it from the market.
So if the customer would have got this equipment, and if this company will not provide the installation service, the customer can get the benefit of using this equipment by using the readily available resources. By using the readily available resources. Okay? Clear? So it means the goods and services, I mean to say the supply of equipment and installation, these are two separate performance obligations, right? Because this installation can be happened from the market also. Okay. The maintenance services are always sold separately. So maintenance service is a separate performance obligation. Now the question is, how many performance obligations are there in this contract? Is it 2 performance obligation? Is it 3 performance obligation?
3.
I told you, you need to check 2 aspects. Number 1, whether goods and services are separate at its own. Number 2, whether goods and services are separate as per the contract also. So in this case, going by the goods and services at its own, you are right. So equipment, goods cannot be used without installation, but customer can obtain installation from another source. Goods is distinct, means separate. So move to step number 2. Installation can be provided by multiple vendors, so service is also separate. In distinct means separately identifiable. So maintenance service have a distinct function because they are sold separately. Move to step number 2. Okay. So whether the goods and services are capable of being separate, answer is yes. There are 3 performance obligations as per the step number 1. Now in the step number 2, you need to look this separately identifiability of goods and services from the perspective of the entire contract, right? So equipment and installation are highly interrelated. In question it is written, this installation service requires high degree of integration because it requires combining of multiple pieces of equipment, right? And hence significant customization is required during installation. Good is not distinct on its own because it must combine with installation, right? So as per the contract, without installation, right, there is no use of these goods. Okay, because this requires high degree of modification, customization, and integration. So as per the contract, goods and installation service are not distinct, not separate. So these two put together are single performance obligation. And of course, maintenance service is a separate performance obligation, right? So in this example, there are two performance obligation, equipment and installation, because they are not distinct within the context of the contract. As per their own, they are distinct, they are separate, but within the contract, they are not separate, right? And the maintenance service. Is it clear to everyone? Is this clear to everyone? Yes or no?
Yes, sir.
Yeah. I hope it is clear to everyone. Yes. Okay. Very good. So now let me discuss one more question. So this refund liability I have already covered in on 18th of May. This part I have covered. Warranty. Let me discuss warranty, right? There are two type of warranty. There are two type of warranty. What are the two type of warranty? Can anyone tell me what are the two type of warranty? Generally, there are assurance type warranty and service type warranty. Have you ever purchased a mobile phone? Have you ever purchased a mobile phone?
Yes, sir.
Yes. Which mobile phone you have purchased?
Samsung.
Samsung. What is the cost of that? What is the price of that mobile phone?
19,000.
Sorry?
19,000.
19,000. And have you got any warranty? 1 year warranty probably you got?
Yes, sir. Yes, sir.
Right? There is an option also. You can purchase extended warranty also. So normally these products came with a 1 year assurance type warranty, which is with the product. So 1 year is 1 year warranty is with mobile phone. And there is an option you can buy extended warranty also, right?
Yes, sir.
Yes. So there is a lot of companies like One Assist. So there is a company called One Assist which is providing the extended warranty packages, right? So when you go and go to Tata Chroma or let's say Vijay Sales, and when you buy the phone, they will ask you, Madam, would you require extended warranty? You will ask, what is the price of the extended warranty? They will say, by getting an extended warranty, you will get a protection for your mobile phone for the next 2 years. Means 1 year is there, but 1 plus 2 year. Okay. And the price will be 4,999. Roughly 5,000 rupees. So this is known as a service type warranty. So now the question is, which warranty? So let's say you have purchased this mobile phone 19,000 rupees and you have paid 5,000 rupees for warranty, which is extended warranty, 24,000 rupees. Now the question is, the Tata Chroma or Vijay Sales, the supplier, has received 24,000 rupees. Now the question is whether this entire 24,000 rupee has to be recognized as a revenue or only 19,000 rupee has to be recognized as a revenue.
24,000.
Only 19,000 rupee has to be recognized as a revenue because this service type warranty has to be recognized as a revenue over the period of the warranty, right? So let's say, but skipping this example, let's say you would not have purchased any extended warranty and you have paid 19,000 rupees and you come back with the mobile phone. Now the question comes, while this mobile phone is with 1 year warranty, so whether the supplier or the seller, whether the seller will recognize entire 19,000 rupees upfront or seller will defer some portion of revenue. So my question is whether this assurance type warranty, which is 1 year, is it whether there are two performance obligation, sale of mobile phone and giving 1 year warranty, or there is a single performance obligation? There is only single performance obligation. So assurance type warranty which comes with the product does not qualify as a separate performance obligation, right? So whatever 19,000 you have paid, the entire money has been recognized as a revenue because when he transfer the mobile phone to you, so basically he has satisfied the performance obligation at a point in time, right? But of course, 1 year warranty is there, you can go and you can get your phone replaced, or you can get your phone repaired. So in that case, this warranty provision, the cost has to be taken in the consideration as per Ind AS 37, right? So that supplier, vendor, shopkeeper the company has to recognize a warranty provision cost as per Ind AS 37, but revenue has to be recognized upfront for 19,000 rupees. But if the company has sold the service type warranty, extended warranty, then the extended warranty revenue has to be recognized and the cost needs to be recognized over the period of the extended warranty. Is that clear?
Yes.
Is that clear? So this is what just I need to touch base on. So rest, mostly things I have covered, and all these, critical and complex question I have also covered. For the examination preparation, my request to all of you will be, so first you need to, go through with the detailed classes on Ind AS 115, and the second you need to cover this revision classes you have already covered, or if you need to again cover this revisionary classes, you can, of course, these are the recorded classes. You can go and you can listen the recorded classes again, right? But yes, the detailed classes are important because you can see my Excel file which I'm using. From the detailed classes, you can see for every concept I have given a small example. For every concept, you can see accounting entries, examples, calculations for every aspect, right? So when you go with the detailed classes, you will find the relevant question of study material. You can find the small concept from my side, and you will find the journal entries also. It will help you in understanding all the concepts. Okay, and then you can cover the revisionary classes. If you have not covered the detailed classes, please do that. And this revisionary classes, you can just refer the complex question which I have additionally covered, right? So it's 8:45 now. Can I conclude the session, or if you have any question, I would be happy to answer. Otherwise, allow me to conclude the session. It's Sunday, I know. You guys are also thinking about.
Sir, have we solved those questions from the module in those detailed classes?
Yes. So in the detailed classes, lot of questions from the module I have also solved in the live classes, right? Lot of questions. In addition to my own questions, I have solved lot of questions.
Okay, sir. Thank you.
Yeah. Any other question?
No, sir. Thank you so much, sir.
Prashant?
Yes, sir. Thank you.
Thank you, sir.
Thank you, Rahul, for this lovely feedback. So guys, thank you so much, and I hope you have enjoyed this class thoroughly for Ind AS 115, right?
Yes, sir.
So
Yes.
thank you so much.
Yes, sir. In fact, you have explained the concept in very well.
Thank you so much, and wish you all the best for your preparation for your exam. Thank you so much. Bye bye. Take care.
Thank you, sir.
Okay, sir. Thank you, sir.
Yeah, session is over. Thank you so much.